man, a red day for Bitcoin, giving up the gains from yesterday. And I warned you in yesterday's video that we should not trust the pump we were seeing. Go watch this clip here. All we're seeing right now, and the candlesticks we're seeing, is we're just seeing this action here. You saw that candle where we got rejected. That is just there. And there's nothing wrong with getting a pump for Bitcoin all the way up even to here, right? This is part of the motion. And exactly as I said there, you could see that we're just running to the top of the triangle. Now, it doesn't mean that this relief rally is over. We could still see a little bit of a bigger relief rally. We're going to go through the charts. I'm also going to show you the indicator I've just seen appear, which is something I've been waiting for a long time. We've got a whole bunch of macroeconomics to look at as well. And we need to cover off what Deutscher has been saying, because I just didn't take a liking to it. So let's take a look at what he was saying as well. But first, let's get straight into the Bitcoin chart. And as you can see, we were getting the move to the upside, which I was suggesting yesterday, right? We were getting this pump to the top of our symmetrical triangle. This is a bearish pattern because you enter in a downward trend, and it's a continuation pattern, which means you should be continuing more likely than not the pattern from which you entered in. Okay, so now what we would need for the clear breakout to happen is you would need a breakout to the top side. So what that would mean is if you got the break of this triangle and a retest, something like this, then you can be bullish of a move to the upside, to the top of the wedge, and then up back to the levels at, let's say, 30K. But at the moment, all we're doing is we're getting closer to this apex. So don't be surprised if we get a little bit of sideways action before this decides on a direction either towards the downside or the upside. Remember, the majority of the trend and the probability continues to sit with the downside. If you've not watched my video from yesterday, go watch that where I explain this in detail. But also you can see here, if I come onto the 4-hourly, you could see the couple of candles before did flip the 4-hourly bullish, but then the red has brought you back to the EMA ribbon. So now the question is going to be, if we just zoom into this section here, is do you get a bounce from this 4-hourly EMA ribbon, or is it going to continue red? So if it continues red and you flip your EMA back, then you're entering a sideways panel. You're neutral on your EMA ribbon. But if you get a bounce from here and a nice big move to the upside, then the question is, can we break this channel to the upside, and can we go for a nice longer sustained rally into our daily EMA? Because if I switch across to the daily EMA, you could see that even if we run up here on a nice move up to 26,000, that could be a nice relief rally and a good trade for you guys to take. If you guys want to take this trade, I would take it on spot on BYBIT and BitGet, links in the description, but I would not be taking this trade on leverage. And that brings me back to the next topic which I want to talk about, which is Deutscher. I mean, I was watching a clip from his video earlier, and he was talking about taking 20x leverage trades on Bitcoin. Now, I know Miles will be the first to say he is not a professional trader. I mean, he prides himself on being a fundamentals guy, studying DeFi and yield farming opportunities. So suddenly for him to be showing his audience that he's doing 20x trade in a bear market against trend, guys, come on, we need to be sensible. I would never tell you guys to take leverage trades. You know my stance on taking leverage trades, particularly in this market, particularly on a trade which is against trend in a downward trend. Guys, you're just asking to get wrecked, so don't do that. And then the next thing, which I just had to call out, was the fact that he then comes out and says, he gives you a 20%, an 18 to 20% yield farming opportunity on Near Network. Yep, he asked you to jump into a stable coin, USN, stake it on a Near wallet for 18 to 20%. And by the way, this was the same guy that was telling you to do the same on Anchor. And I want to remind you guys that when you see these opportunities, and he kept saying, oh, this 20% is too hard to, too difficult to ignore, right? We need to be taking that 20%. No, you do not. No, you do not. Have you not learned anything from UST, Terra, and Anchor? What happened? When it's too good to be true, you do not need to be chasing that. And by the way, it's one thing to be doing this in a bear market when everybody's jumping into it. And I didn't even go into Near Protocol at that time. But to be doing it now when you've just seen the collapse of UST, you've seen the struggles in centralized finance, like that is hugely, hugely irresponsible. And you guys know my take on it. Right now, it's all about holding coins. You need to be taking your coins off every single platform. You need to be holding them. Don't worry about 5% here, 6%. If somebody's telling you they got 18% right now in this market, stay away from it. Not worth it right now. Hold your coins. If you can dollar cost average on Bitcoin, Ethereum, and keep things simple. Be careful who you're listening to out there, guys. Now, Let's get back into this. We've got loads to cover off. We've got a really big week here in the macro economy. We can see we're opening up red here on the pre-market for the American markets. Obviously, it's a shortened week given the holiday yesterday. 0.5 on the Dow futures. You've got 0.56 on the S&P, and you've got the NASDAQ down 0.72. Now, it's a big week. We know what we've got, which is tomorrow, we get our FOMC minutes. That's from the last FOMC meeting. The minutes come out, which is just the documented version. It's a PDF, which explains what they spoke about. But the markets do move on this because they'll be looking through that to see if the Fed officials were hawkish and if they said anything too aggressive, and the markets will move on that. On Thursday, we get the ADP jobs figures. The ADP jobs figures are the private payroll figures to estimate what the real non-farm payroll figure will be on Friday. So look out for that on Friday as well. That job market figure is expected to come in lower than the previous month, but again, it's a double-edged sword where if it comes in too low, then it looks like, oh, you're driving us into a recession, Jerome Powell. But if the job figure comes in too high, then it's going to be worrying for the markets as well, because then it's like, okay, Jerome Powell's going to have to increase interest rates even further. So we're in a sticky situation. That number's got to be like a Goldilocks number at a sweet spot that the market is happy with at around the 250,000 level, which is what most people are looking for. Now, the other thing I've noticed, which is really interesting for you guys, is there are two exact type of, there's one exact type of project which is outperforming Bitcoin right now. And this type of token I'm going to share with you. And what we'll do is let's take a look at this. And what you'll notice is Bitcoin is this black line here, okay? And you can see Bitcoin is down 56% over the last 90 days. If you look to the left-hand side of it, these are the projects that have outperformed Bitcoin. And if we go from order, you can see, we can ignore these. These are all small projects, small projects, small projects. And then I want to focus on these two here, FTT and BNB. Both of these have not retraced as hard as Bitcoin, which is very, very interesting. And what do these both have in common? These are the two exchanges, the two centralized exchanges, which have held up well versus the other. So in all the panic and the burning and the smoke of all these centralized finance companies being exposed, right? The likes of Celsius, Voyager, we're seeing them implode. Who's come out well in this? It's Binance, it's FTX, because they've able to come back and say, hang on, we're still hiring in the case of Binance, we're still growing, we're slashing fees on Binance US, we've just raised another fund. FTX the same, going out buying whatever assets they want to buy, giving out credit facilities, right? These two have come out saying, we are a clear tier one in centralized finance, the rest of you are a joke. So for them, there's a huge consolidation going on, which is driving up the value of FTT and BNB. So an interesting trend for us to continue to watch. Now, I also want to take a look at some on-chain metrics, because there's been some interesting on-chain metrics, which is starting to give me the clue of what I wanted to see. For those of you guys who've been watching my videos for a while, what have we been talking about? We've been talking about waiting for the tourists to go. One of my biggest pet peeves, when I get frustrated in investing, is when everybody's talking about a certain project, or in this case, Bitcoin. When everybody's talking about Bitcoin, if it's the person working at Subway, if it's my Uber driver, if it's somebody in the office, if everybody's talking about Bitcoin, at that point, what do you know? The tourists are in the market, the price is getting to the top, we're at the end of a bull market, and we should be thinking about pulling the escape cord because we need to get out of here. But when nobody's talking about it, when nobody is watching content like this, when nobody is active on the social channels, when your Uber driver is like, oh, Bitcoin's a scam, isn't it? Then when I'm like, yeah, this is great. This is when we need to get to work. Everybody's disillusioned with Bitcoin right now. They don't believe in it, and you can't keep Bitcoin down, right? It's always roared back to all-time highs. Now, when we take a quick look at this chart, what you will notice is that Bitcoin has had its worst month since 2011, down 37.9% in June alone. A huge, horrible red candle to the downside, and just goes to show how bad a month this is. Worst since 2011, a single month. Now, this is where things get interesting. Now I want to look at how are the number of active addresses evolving. And what you'll notice from this chart from Glassnode is you'll see that you get maximum, you get a channel here, and this is called the low activity channel. Now, in essence, what you see above it is when you're getting to bull markets, right? The price is roaring and loads of new addresses are active right now. These are what I call the tourists. If you can cut all of these off, these are the tourists. The ones under here are your hodlers, right? Those are the ones who are in crypto, good or bad, they stay in crypto. So call that the low activity channel and the hodlers here. Now, what you can see is during the previous bear market, look what happened when as price started to fall and go down towards its bear market. What happened to the number of active addresses? It fell to this low activity channel and stayed there until the Bitcoin price started running back up on its attempted run back up. And then it fell back off again. And again, the number of active addresses fell back again. So all you see, these are the tourists, right? When the price is high, here are all the tourists. When the price goes down, the tourists leave. When the price looked like it was trying to roll back up to 20,000 again, the tourists are like, oh, there's an opportunity here. Let me go back in. And then they leave. But all of these ones underneath are your hodlers. Okay, and we're getting the same trend back in now. We're back into this low activity channel. Got rid of those tourists. There's less and less buy the dip. There's less and less of the average Joe saying, I want to buy some crypto right now. That speculation is starting to leave the market. And you can see that by the current active addresses. Okay. Now, further evidence of this is looking at the number of active entities as opposed to just addresses. And again, you can see the same thing. You've got this bull market activity channel, which is the green bar on top, and then you've got the red channel below. And again, during the previous bear market, look how you fell into the red channel and you stayed there for a while until the price ran back up to 64,000 in 2021, which is when the wallets came back up and peaked at 432 active entities. And then you've seen we're back now in our low activity channel right here, which is very, very interesting. Okay, so you can see that back in our low activity channel at these suppressed levels, similar to the previous bear market. Further evidence that the tourists are starting to leave is looking at the number of transactions. This is entity adjusted, of course, but again, look at this previous bear market, how this fell into the channel, fell nice and low, came back in as it tried to run up to 20k but was unable to, then it fell back again, and then you saw now it's really falling to some lows and you're downtrending here and remaining stagnant on the number of transactions, which is again evidence that these tourists are starting to leave. It's a really good sign for us, because until that happens, until you get that capitulation, until people think Bitcoin is really dead, we're not going to get that roar back up to the prices we want to see. Further evidence of this is looking at the number of addresses with a non-zero balance. The reason this is important is a fewfold. Let me just pop me there. Now, what we notice is when we've really created a bottom, when we've really got to our low point of capitulation before our next run up to the upside, we notice something. We notice there's a purge of the number of wallets. We lose a number of wallets. People actually end up on zero. They sell everything and their wallets are at zero, okay? And that's why you get this fall, because remember, these are non-zero wallets here on this chart. So when you're seeing a fall, like here, this means you've got a lot of zero wallets. In other words, people have sold everything up and they're out of crypto right now. So what you saw here is in January to March of 2018, we saw 7 million addresses. 24% of wallets went to zero. And then that sets you up for your next run to the upside. Similarly, if we look at April to May of 2021, we saw a reduction. This is when the price ran to 29,000 last year. We saw a reduction of 1 million addresses, which is 2.8%. And if we look at May 2022, which is where we've just gone through, we've only seen a 470,000 reduction in the number of non-zero balances. Okay, so that's 1% of addresses. So you can start to argue, okay, maybe these are supposed to get less and less and less. But for me, for only 1% of addresses to be purged is not enough. It's not significant compared to what we've seen in previous drawdown. So that can give us a clue that, okay, maybe we need a little bit more of a fall just to push those people over the edge, to lose some of those wallets before you're ready to head to the upside. So let's quickly wrap back up here on Bitcoin. What are we looking out for here on this chart? Just to reiterate, I fully expect that we could see either rotation here to the downside on the daily chart. Either we're going to see us fall to the downside, which is the bearish bias from this pattern, or we could see a relief rally. I'm not opposed to seeing a relief rally up towards 24, 25, but if you're trading this to the upside, the W pattern, which I shared with you yesterday, which could be forming, if you're trading this W pattern, then you need to have a lot of take profits leading into this ribbon, because there'll be a lot of sell pressure, a lot of shorts pushing you down from this ribbon, and you need to be taking profits into it, particularly if you're trading into the opposing trend, which is a bearish trend at this point. Guys, also a quick update on Cardano. Cardano's Vasil hard fork is now inevitable after successful testnet. So they've successfully tested their net. Remember, they delayed the Vasil official hard fork from the end of June to the end of July. So we'll be looking out for that at the end of this period. We've also had an update from Ethereum, which is their second of 3 public Ethereum testnets. Sepalia has been successful. So that's really good. And again, working towards a target of end of August on Ethereum. So really 2 big catalysts, which could give some stability to the crypto space, right? If you could have 2 of the biggest layer 1 platforms out there by market cap, both successfully hard forking, Ethereum to proof of stake, Cardano with its Vasil hard fork, that could be a move that could help move the market a little bit. But do I think that's really going to settle markets? No. I think this month is all going to be about earnings, the earnings season. And when the earnings seasons come out, if we can see companies delivering better than expected earnings, that could give us some brief respite in this month of July. And if we can see that start to happen, then maybe we can have a little bit of a pause from the pain in July. But still, I continue to have this gut feeling that we need to have another visit down to 17,600, maybe even 16,000, just to wick out those last bits of capitulation, or then comfortably saying, okay, we're ready to head back to the upside. Hope you guys enjoyed this video. As always, if you appreciate this type of content, smash up the like button. Don't forget to subscribe. As always, go watch this video, and I'll see you in the next one.